Hey, welcome back into Eye on Agriculture. I'm Britton Rucker. Raising cattle prices, shifting feedlot returns, and changing consumer demand. There's a lot happening in the livestock market currently. Today, we're breaking it all down with what's driving beef prices to how pork and chicken are stacking up. Joining us today from Kansas State University, Glynn Tonsor, livestock economist. Glynn, cattle prices have been a very hot topic lately. What factors are currently driving the market trends?
Yeah, throughout 2024, I would say beef demand in particular was strong both domestically and abroad. So foreign demand for U.S. beef as well as here at home. And we had supply fundamentals. So the beef cow herd has not been expanding. Those two combined to what some would call a hot cattle market, higher elevated prices. As 2025 has started, there's definitely a lot of uncertainty on the demand front that we can talk about.
Now, feedlot returns, those can also be unpredictable. How are producers managing cost and maintaining profitability?
Yeah, so here early in 2025, typical feed yards have been experiencing pretty good profits. Those are expected to moderate as the year goes on, primarily because fed cattle prices aren't expected to keep up with placement prices. All the time, feedlots consider mitigating those risks by hedging what they pay for cattle, corn, what they might get for cattle leaving, with an eye to cost of production management and animal health. That's not new, but as these animals are worth more than the past, the value of those efforts is even higher.
Let's talk a little bit about consumer demand. Glynn, how are beef, pork, and chicken competing in the market right now?
Yeah, so again, in calendar year 24, I would say both foreign demand and domestic demand was quite good for U.S. meat products. We're talking about all three major species when I say that. The Meat Demand Monitor is a project based here at K-State, funded by the Beef and Pork Checkoff, does a deep dive into domestic consumer views and what they buy and why they buy it. I will interject in February of 2025, 20% say their household finances are better than a year ago. I'd love to see that number go up. We're going to be watching that during 2025 because there's elevated uncertainty on the macroeconomic environment, trade uncertainty, inflation uncertainty, and so forth. And those are developing into possible headwinds for meat demand here in 2025.
Looking ahead, what should producers and consumers expect in terms of meat prices and availability?
So on prices, I think we ought to expect variability or ongoing volatility. On availability, so that's the product volume, not price, but just the volumes on the market. Beef is probably going to be less this coming 2025, 2026 than in the past, reflecting a smaller beef herd and subsequent production. We might start herd expansion in 26, but that's delayed. So less beef on the market. Pork and chicken volumes probably up a little bit, 1-2%. The main driver of prices, and it's going to be variable, I think, is demand uncertainty. So here early in March 2025, we're talking more about inflation, possible recession, those kinds of things. Trade uncertainty impacts foreign demand for U.S. meat. Those all have a direct impact on variability of meat prices. I talked about this in length at our recent Cattlemen's Day and then swine profitability conferences here in Manhattan. Listeners are welcome to go to our agmanager.info website for more related information.
Well, Glynn, thanks so much for coming on and chatting with me. Everyone stick around to Eye on